We find ourselves at the intersection where we are moving from an industry, specifically crypto industry, where it was speculation based, narrative based. It was looked at as a open public casino where you can just swap tokens, trade meme coins, and have endless opportunities and amount of new cryptocurrencies launching on a daily basis. However, with no utility, no focus, and no added value. And now we're shifting from that type of mentality to a more mature industry where established institutions are adopting it, governments are regulating it, and individuals, retailers specifically, feel more comfortable using these products that are about to be launched, already launched, that are made from established and regulated institutions that have decades of proved track record. So now we're seeing, for example, here CoinMarketCap, where cryptocurrencies are not ranked based on their liquidity or fundamentals, use cases, solutions they bring, but merely by their market cap. With the largest one obviously being Bitcoin, with a massive 58% market share compared to the rest of the market. What this means is we're sitting at 4.18 trillion in market cap. So 58% of that 4 trillion belongs to Bitcoin alone. Second in place is Ethereum with 13% market share. So if you add the top two cryptocurrencies together, you already have over 70% of the entire industry are literally dominated strictly or simply by the top two cryptocurrencies. Now, the first one that is at 58% market share is literally led by narrative, first move advantage, hype, and so on and so forth. And there is another one, the second one right now, that is more geared towards being the solution to the current monetary system that is literally being affected right now. It's also led by the World Economic Forum's agenda to develop a more neutral technology where the US dollar is not going to be the sole global reserve currency, at least for the foreseeable future, but rather there'll be a new technology in place, new infrastructures built that are eventually going to dominate and be the foundation for the new financial economy, global financial economy. But don't take my word for it. In this industry, knowledge goes a long way. And the more you understand how things work, the more you're going to appreciate and actually identify and see on a daily basis how we are gearing or we are heading towards that ultimate place where traditional finance is going to be built on top of this new infrastructure known as blockchain. And it's not going to be based on hype and speculation anymore, but rather it will be based on functionality, utility. It's going to be based on fundamentals, on what's actually bringing solutions and what's being adopted and used, and so on and so forth. But like I said, it's easy to make statements like this, but let's back these statements with facts, with articles, with real life examples. So the best way to start that, to do that, is of course with at the World Economic Forum. There's a place where annually great minds, economists, politicians, and market leaders come together behind closed doors and put their minds together and come up with ideas. So this year's topic at the World Economic Forum in Davos, Switzerland, was US dollar, right? So the topic was why the US dollar will be indispensable as the world's reserve currency until it's not. So this is a powerful statement that you don't even have to read between the lines. They're actually telling us exactly what's about to happen. The US dollar is going to lead this digital economy, usher in the world on chain, and then there won't be the need for monopoly anymore, for a single currency, fiat currency, to dominate global economy, but rather it will be led by a new technology that is also an asset at the same time. So let me not bore you with by going through the entire text, but I just want to highlight some pick up some points that I'd like us to all understand and be on the same page. Now, let's keep in mind, in order to have a solution or offer a solution to something, you first have to identify and understand the challenges. So let's briefly go through the challenges that present themselves right now. So the US dollar, as we know, is at near record high in terms of its dominance, but its future role as the world's reserve currency continues to be questioned due to financial fragmentation and global debt concerns. Financial fragmentation is, as an example, right now, we'll see that, for example, the Chinese yuan is right now dominating financial trades at 56%. We'll get to that. But there's so many different currencies that are right now dominating, like the Singapore dollar, the Swiss franc. It's normal that one decisive dollar that is literally taking place and shaping or dominating the global trade anymore. But actually, the yuan has actually outpaced in terms of global trades financing. The yuan has actually outpaced the US dollar. So anyway, besides the fragmentation, the global debt concerns are another challenge that we're faced with right now on a global scale. Another thing is US borrowing, right? It's US debt, specifically the US. And the challenges from other currencies, right? Traditional and digital, and the burden of the US dollar debt on developing countries that also raise question about the ongoing dollar dominance. So, and also the panel also discussed, of course, at the annual meeting in 2025 in Davos, expect that the US dollar primacy to continue for a foreseeable future, but gradually diversification could necessitate greater global collaboration in the years ahead. In easy English, this just means that the US dollar will remain and maintain the global reserve currency to an extended period of time due to all these geopolitics that are happening. Will need a neutral solution that doesn't belong to the US, to China, to Russia, to Europe, or to Africa, but rather a neutral technology, just like the internet is, that everyone can use without jeopardizing or compromising other fiat currencies' value. So those are the challenges that we're faced with right now, right? So another thing that I want us to look at right now is that another challenge that we all are aware with right now is that the dollar. So while many economists expect that US dollar to remain the primary reserve currency in the coming years, there's still some open questions, right? These questions persist about whether the US borrowing is sustainable. How much longer will this US money printing be sustainable? This is the challenge. This is the question that they were asking themselves, these great minds from all over the world. So how other currencies might challenge the dollar, and how resilient the dollar-based system, which is the debt-based system, will be in responding to economic, geopolitical, and climate shocks. So these are the questions that are being asked and tossed around amongst these global leaders. And also another challenging is that the ongoing US dominance, including burdens of developing countries to manage debt and access liquidity. So these are all challenges. And these, in order to address these challenges, there has to be a solution. And this is where it really gets interesting now. So being a global reserve currency gives you something known as the exorbitant privilege. And what does that really mean? it means that, first of all, this individual is saying that United States seem to think that debt is a free lunch, right? You can just keep printing, and you get that if you have the global reserve currency, you can really print, and because your currency is globally acceptable, you can literally export your debt, right? But the challenge here is that pointing out that interest rate payments on federal debt now surpasses the US defense budget. We heard about that. So that's over $1 trillion right now. So US debt, just repayment on interest alone, surpasses the entire US defense budget. And keep in mind, US is the largest military in the world, and their interest payment alone surpasses their defense budget. So meanwhile, the dollar remains at near record highs relative to other fiat currencies. Highs not seen since 1985 and 2002. Now, in both previous cases, the currency fell significantly within a year or two. So that means that, and we know what happened right after the dot-com bubble. So in 2000, right, there was heavy printing that took place to stimulate the economy again. Same in 2010 after the 2008 housing bubble, and same after 2020 after the COVID crisis, right? So every time there's a crisis, like we always said, 1 to 2 years later, after heavy printing takes place and inflation takes place, there's always been a multi-year bull cycle, or a very, very significant amount of inflation of money printing, which literally lifted up assets, and especially assets that are at least deflationary, if not scarce. So back to the meaning of exorbitant privilege. This is an economist term for the combination of lower borrowing costs and benefits of nations issuing global reserve by benefits by nations that have the global reserve currency status, right? So you can borrow money at lower cost by just printing it for yourself. Another thing I want us to really understand here is that anything that goes on without any constraint eventually has to stop. So with all of this said, nothing can go on like this forever, because keep in mind, the question is, how sustainable is this, right? The question persists about whether US borrowing is sustainable. How much longer can this take place, where you see that the federal debt now surpasses the entire US defense budget? Just the payments, just the interest payments alone. How much longer will this go unchecked? And anything that goes on without any constraint eventually has to stop or will crash. So those are the challenges that the World Economic Forum was discussing, right, at this year's 2025 annual Davos meeting. So this is just to highlight and set the stage for the challenges that we're faced with, and we need to address these challenges. So this is why when we started this session, we were looking at the crypto industry, especially this coin market cap, and say we are now shifting from just looking at this industry as just speculation, narrative driven, just flipping coins and meme coins, and we're looking at it as a technology, an asset that can serve as a solution to the challenges where great minds, global leaders meet annually in Davos to discuss these challenges. And let's look at this industry as the solution, because it's a technology and it's the future where we all understand that we are in the transition of a brand new global monetary system, and it's going to be on chain. But don't take my word for it. Now we looked at the challenges at the World Economic Forum. Now let's start looking at what's happening in the real world. So let's start with the VC. VC are venture capitalists. They come in form of hedge funds or just wealthy individuals that are focusing on investing in early stage startups. They come with heavy liquidity, deep pockets to invest in early startups, in new technologies. We saw the same happening in the early days of the internet, which eventually led to the dot-com bubble. We saw the same thing that also led by VCs that led to the housing bubble. And then we also saw the same thing during the COVID crisis, right? As well. Whenever there is a new technology or a new situation, new opportunities, VCs are always the first to move forward. But now, even the VCs alone, they are a lot more careful now and not chasing narratives anymore. So this is just verifying what we just discussed at the beginning, that we are at the crossroad of shifting from a speculative, narrative-driven industry to a more sensible one that looks for utility, solutions, use case, and is more fundamentals driven. That comes because more institutions are now adopting, governments are regulating, and retailers are gravitating towards those blockchains or applications that have more utilities and use case and serve as solutions to the retailers' challenges, so the industry's challenges. So crypto venture capitalists are a lot more careful and not just jumping on every hot narrative. This is how it used to be, especially in 2021 during the one of the largest, if not to date, the largest bull cycle yet. And this is what's happening right now. So crypto venture capitalists are dialing back their risk appetite, avoiding the hot flavor of the month, and applying a more critical lens to investments, right? And VCs are a lot more careful now. It's not just a narrative play anymore like it used to be. So it's this industry starts to become more and more mature. It's no more looked as a casino, a gambling place, but it's now that is led by narratives and hype. And before you could throw a check and say, oh, there's another L1, layer one blockchain, but it's going to be an Ethereum killer, for example. So once you say that, subsequently, you saw all these new chains forming, right? So everybody was building their L1 chain, and they were coming all over the place, claiming there'll be Solana killers, Ethereum killers, Bitcoin killers, whatever the case may be. And this, of course, made the market to become fragmented, oversaturated, like just too many applications, too many layer one blockchains, just too much of everything. And a lot of funds were being deployed to these new layer ones, for example, and new infrastructure, which isn't viable anymore. So all the liquidity were being spread out literally on a weekly basis. Every week there's a new L1. And these venture capitalists were just throwing money at these, trying to see if it sticks. And now they've come to a point to understand that that's not a good business model anymore. It's not useful anymore. So now the question they ask themselves is, who has been using it? That's the question. Who is using these blockchains or these applications? Who are using them? Is the crucial question right now. So we're at a phase where you don't have that luxury to just bet on these new narratives anymore. Those times are gone now. You don't just see random meme coins and you just go with the narratives, or just random L1s and you just go with them because you can liquidity farm them and get some free airdrops and all of that. Those days are gone. Now, investments now require a much more critical lens. So you really have to start thinking now. How can you start thinking if you don't understand the market and how it works? So that's the first step. Educate yourself, understand the markets, how it works, and now you can start thinking. There's all this infrastructure being built in the industry. But who has been using them? Who is using all these L1s that are being built? Who is using all these tokens, meme coins, utility tokens that are being built? Millions of them every month. Are there enough transactions? Is there enough volume coming through these chains to justify all the money being raised for these new blockchains? These are the questions we should ask ourselves. These are the questions VCs, venture capitalists are asking themselves. Now we're moving from a narrative-driven industry to a more mature, solution-driven, fundamental-driven, long-term sustainability-driven industry. And it was led by this year's World Economic Forum laying out the challenges of the dollar, its dominance, the global financial system. What does it need? And this is the technology that is going to be used as a solution to the challenges laid out at the global World Economic Forum. So now that we understand that, let's take it a step further and look at real projects and what moves that they are making. So we need to understand again. Let's just go back real quick and understand one thing here, is that the question is, let's come over here. What we are trying to address here is this. There's a new infrastructure, a new financial infrastructure. This is the real deal here. There's a new financial infrastructure being put in place. And this is exactly what we need. And another thing here is that is right here. While cryptocurrency and transparent digital payment system could present advantages for the transactions and markets, only a few economists see private forms of money such as Bitcoin replacing the US dollar, right? At least in the near to midterm. So, and even diversification of other currencies is not as simple as switching from the dollar to euros or to yuan. It requires strengthening connections between banks and clearinghouses and other institutional shifts that could take years, if not decades, to develop. So the key here is infrastructures, building infrastructures, and not just random infrastructures that are actually being used. So the question that we're asking ourselves here is that who has been using it? Who is using it, right? We have to think about these questions. Think about them. Who has been using them? And are there enough transactions? Is there enough volume coming through to justify the money raised? So these are the questions we're about to answer for ourselves. So the first company here we're talking about is Coinbase. Coinbase is the largest centralized exchange in the US. It's the second largest centralized exchange on a global scale. Now, Coinbase has a blockchain, layer 1 blockchain, just like we discussed, one of the layer 1 blockchains. However, it's called layer 2 because it's built on Ethereum, right? Their blockchain is a layer 2 blockchain because it's built on Ethereum, meaning it's using Ethereum security to validate or to process the transactions. When Coinbase launched, they said that they were not going to have their own base token, but rather they will just be using Ethereum. But all of that changed, and just a few weeks earlier, they announced that they're going to come with a base token as well. So that's beside the point. So what Coinbase is trying to do is, first of all, they're also still on layer 2 on Ethereum, building on Ethereum. They're also co-owners of USDC stablecoin. So they're the co-founders of the stablecoin, they and Circle. Coinbase owns half of Circle's because they're co-owners of Circle, which is the parent company of the USDC stablecoin. And majority of the stablecoins, as we know, are also on Ethereum. Now, Coinbase is going after the certificate license of National Trust Charter. Usually, this license literally enables you to become a bank, But of course, again, Coinbase claims they don't want to call it a bank. Just like they said at the beginning, they're not going to have their own token. Now they're saying they don't want to call it a bank, but we all know what this is leading to, right? One thing that I want us to take away from here is this: the on and off ramping. The on and off ramping here. Why is Coinbase going or taking this route? Why do they seek alliances? Is because of this. Coinbase wants to offer basically a built-in on and off ramp and no longer have to use partner banks on ramps and off ramps. So Coinbase's aim is to have their own banking license so that they don't have to go through their partner banks and share their revenue with them. They want their own licenses and offer their own built-in on and off ramping. If you ask what is on and off ramping, Steve, on and off ramping is when you get paid in the real world and your money lands at a bank in your bank account in your local bank, and now you want to get into crypto and onto the blockchain. You have to somehow manage to connect your bank to a centralized exchange, such as Coinbase, Binance, Crypto.com, or whatever the case may be. Once you do that, you have to somehow transfer your funds, your fiat, from your bank account onto the centralized exchange. And by doing so, you receive a stable coin. And now from there, now you can swap that stable coin for Ethereum, for Bitcoin, for your meme coins, or whatever the case may be. And that's exactly where the gap that Coinbase wants to close. It wants to eliminate the banks. This is why they say they don't want to call themselves banks. They don't want to seem like they're a competition to the banks. But basically, they want to cut off the banks so they cover the on and off ramping directly by having this license. So that's where they're headed. Keep in mind, this is all about building infrastructure. They already built the layer 2 blockchain on Ethereum. They already are co-owners of the second largest stablecoin USDC on Ethereum. And now they are seeking alliances so that they can cut off the traditional banks, keep all the fees to themselves, and become actually have a built-in on and off ramp on them of their own. So literally, you'll be able to have your salary paid to your Coinbase account, which will be on chain already. So you don't have to go through the bank to connect your bank account to them, but rather your salary goes directly to them, and your salary will eventually be on chain already without you having to go the extra step to use the banks to on ramp or off ramp your crypto. So this is the takeaway of this article right now. Now, another thing that I want us to look at is Walmart. Walmart is the largest retailer in the world in terms of size, in terms of revenue, as we will see shortly. So it's that time of the day that Walmart now, they are the majority owner of this startup known as OnePay. And they're introducing now crypto trading and custody to their OnePay fintech company. Is by majority owned by Walmart, right? So let's read just a little bit further. So OnePay is a fintech firm, majority owned by Walmart, like we said, and is preparing to roll out cryptocurrency trading and custody futures in its mobile app, right? So they have a mobile app known as OnePay, and now they want to add some more features to it, and where you will be allowed, users will be allowed, millions of users, US customers, will be able to buy, hold, and potentially even spend digital assets like Bitcoin and Ethereum directly on OnePay platform. Why is this so significant? It's because this is a way to for mainstream adoption. And the whole idea is that the company has yet to make an announcement, is not officially announced yet. However, the idea is that they want to transform OnePay into a comprehensive everything app, right, for digital finance. And it was founded in 2021, so right at the peak of the last bull cycle. And it was a joint venture between Walmart, like we said, and this company called Ribbit Capital. And now they want to expand into into the digital world, into the blockchain technology, blockchain industry. So today, its app provides high-yield savings accounts, debit and credit cards, buy now, pay later options, and even wireless phone plans. However, now they want to add trading on their app as well. And they want to be a super app, just like the one in China known as WeChat, right? Which you integrate payments, finance, and commerce in a single platform. So we've gotten to a place where Walmart now is entering the digital the digital world, where they offer custody to the clients, they offer buying, selling, trading cryptocurrencies, and even custodying it. So this is where we've come. This is how far we've come so far, community. And this where this what we meant by saying that we're moving from speculative industry to now solution-based industry, where infrastructures are being built not by just some random startups, but by established, regulated, large institutions such as Walmart. Just to have an idea of how large of a retail store Walmart is, as of August 7th, the largest retailer in the world is Walmart, has been Walmart. And their revenue has surpassed 670 billion. And they have over 10,000 stores across 19 countries. So imagine how huge this is when a large institution like this, a retail store across 19 countries with over 670 billion in revenue, now is offering their own trading where you can trade, buy, hold, custody your own cryptocurrencies. Imagine now offering all these services to their 150 million customers across the world. And this is just Walmart alone, but the top 10 global retailers represent over 2 trillion. So half of the entire crypto industry right now is the entire crypto industry is at 4 trillion. And just the top 10 retailers globally represent over 2 trillion. So half of the entire crypto industry. That just shows you how much potential this industry still has. And the runner-up is Amazon. And we already know Amazon is already into cloud computing, into data servers, and they're also into in the digital space already, in the crypto industry already. So let's take it a step further. Keep in mind we are verifying the facts, the statements that we made at the beginning. We are fact checking them. We are verifying it. And this final one is from the Swiss Bankers Association, right? As we see here, this directly is from the Swiss Bankers Association. We already went into detail about this, so we're not going to really get into too much detail. The highlight of this is that Swiss Bankers Association have reached a major milestone, right? Just last month on the 16th, so just 2-3 weeks ago, the Swiss Bankers Association made a deposit token that was blockchain based, is a blockchain based payment fit for the future. So the Swiss, as always, if in terms of finance, they're always steps ahead of the rest of the world, and they already made tokenized deposits a reality and on a public blockchain. So we saw 3 different things. We saw how Coinbase is suggesting or requesting for licensing so that they can bridge the gap and get rid of the banks altogether, and they'll become the bank through having a banking license. So you can literally have your salary paid into Coinbase, and your deposits are on chain already. And then we also saw Walmart offering their retail purchasers access to their cryptocurrencies that they can use them directly on an all super app where they can use their digital currencies to purchase or do e-commerce online or use it to purchase groceries on all these various Walmart stores across 19 countries. And this is now the next level where the banks in Switzerland directly, the Bankers Association with over 260 partner banks, already went through a public blockchain-based payment for the deposit tokens. And let's briefly understand how significant this is. So anyway, first for the Swiss Financial Center, so the Swiss Bankers Association, led by Post Finance, which is a government-backed bank, Signum, the very first digital asset bank in Europe, in Switzerland specifically, and UBS, the largest asset manager in Europe, are enabling legally compliant payments with digitized bank deposits via a public blockchain, right? We all know exactly which blockchain this is, but we'll get to it shortly. So their report on the deposit token feasibility study marks a milestone for the financial center. And what they're saying here is that tokenized bank deposits are the key to the modern financial world. And the key of these tokenized bank deposits is that they're deployed on a neutral ledger, on a neutral technology known as blockchain. This is the key here. So no longer are these global deposits called dollar or Swiss franc or yuan or euros or whatever the case may be, but it is actually a technology that is being used. It's smart contracts that are being used. It's a neutral ledger that are being used that doesn't belong to the Swiss, doesn't belong to the Russians or the Chinese or the US or the Africans, but it's just a simple neutral technology that everyone can use. And that's the point here. This is what tokenization on a public blockchain, this is why this is such a huge deal. It's not just limited to the Swiss. So, and this is exactly what I want us to highlight here. Right here. So head of digital assets and Post Finance emphasizes the practical benefit. So the deposit token offers great potential for making payment transactions more efficient and secure for all parties in the future. This is the key, all parties. Because using a blockchain technology doesn't limit you to certain geographic regions, is exempt from geopolitics, but rather it's a technology being utilized and it can be used by all parties involved, not restricted to certain geographic regions or not limited to politics, geopolitics. So the feasibility study has shown that blockchain technology works for this and is legally viable. This is the major step, and this is the transition that we're proving the point that we made at the beginning of this session, that we are transitioning from a point where we're looking at this industry from just flipping meme coins and being speculative and narrative driven to actually being a solution. This technology is actually a solution, and the Swiss Bank Association is coming and giving the Swiss stamp of approval, telling us that the blockchain, that blockchain technology works. First of all, okay, it works. We proved it, it's working. And this is not done by some random startups. It's done by Post Finance, by Signum, and by UBS. And it's legally viable, meaning that it is compliant. Not only is it compliant, but it works. And this is exactly what the point is. So it's programmable process known as smart contracts ensure that payments are triggered automatically when specified conditions are met. This opens up new possibilities from automated securities trading to transactions between machines in the Internet of Things. So this is where the future is headed, community. We are moving from the current largest cryptocurrency, which holds 58% of the market share, which is still based on speculation, hype, narratives. And we're moving towards the second largest one, which is Ethereum, that is smart contract based, that is based on a solution to the challenge that was discussed at the beginning of this session at the World Economic Forum, with the question that the dollar was the topic, and how the current world reserve currency is still going to remain the global reserve currency until it's not. And these are the steps, community, that we're looking at and that we need to understand as we ask ourselves, who is using this blockchain? Remember, this is the question that we should ask ourselves and keep in mind. You really have to start thinking. There's all these infrastructures being built in the industry, but who has been using it? Who is even building them? Are there enough transactions? Is there enough volume coming through these chains that to justify the money being raised? And so far, we've been seeing, first of all, let's identify what this chain is. So the Swiss banks complete fast payment transaction using nothing else than the Ethereum blockchain. So we've learned about this. It's not just the Swiss Bankers Association, it's UBS. It's JP Morgan, right? They're using Ethereum for their tokenized collateral network. It's JP Morgan. They've tokenized US treasuries, and they're getting ready to tokenize their money market funds, which are the ETFs as well, on Ethereum. It's about Visa and MasterCard that are building the infrastructures and on and off ramps also on Ethereum. And we could go on and on. We answer the question, where are these infrastructures being built? Who is using them? Established institutions, large market leaders. Where are they using it? They're using it on Ethereum. So according to the Swiss Bank Association, 3 Swiss banks, UBS, Swiss Finance, Post Finance, and Signum Bank, have completed the fast formal payment transaction using bank deposits on a public blockchain. Something like this has never been done before. So the testing was conducted on the Ethereum blockchain. It's successful, it works. We have the Swiss stamp of approval. And another thing is that the attempt to use deposit tokens, which convert bank deposits into tokens on the blockchain for transfer and payments between different banks. So this is not just limited to banks on their own, by the way, but it's also for retailers, of course, and governments. And the beautiful thing that what sets this system apart that was tested on Ethereum is that this is something entirely new. There's not been anything like it before. As these deposit tokens can be transferred between multiple banks, unlike JP Morgan's system, which only operates within its internal network. Keep in mind, JP Morgan is using its own private, closed blockchain. So this is why their system is limited and it's operating within its internal network. But because the Swiss Bankers Association is using Ethereum, a public blockchain, it's now being able to, you can transfer between multiple banks because all those banks are connected together on a public Ethereum blockchain versus JP Morgan's closed and private blockchain that is limited to its own internal network. So once more, the Swiss Bankers Association, led by UBS, Post Finance, and Signum, and 260 more banks, they're launched on Ethereum so that they can have, so every bank is interconnected and they're on one ledger. It's more efficient. They have one liquidity pool. They can trade 24/7. They're immune to geopolitics. They're immune to to fragmentations and all of those things, and that they're more efficient. So again, what we should ask ourselves, where are all these things being used predominantly? Where are the most stable coins? Where are they being traded? Where are they being used the most? And we can all agree, as we see here on this chart, it's on Ethereum. More than 50%, 60% of all stable coins are already on Ethereum, dominating. And another thing also is tokenized treasuries, which is tokenized US short-term debt, and BIDL being the largest one right now. Where is that taking place? Almost 70% of that takes place right here on Ethereum as well, as you can see. So stable coins are predominantly on Ethereum. Stable coins are a $2.4 quadrillion industry. Forex is a over $2 quadrillion industry. The debt market, bond market, is over 300 trillion market globally. And now finally, we also have tokenized commodities. And even that is predominantly, even by far, 80% or 90% is on Ethereum as well. So what are we saying? Back to this question here. And this is how we're getting ready to close this session. We're at a phase where you don't have that luxury to just bet on these new narratives. Those days are gone, right? Now it requires much more critical lens. You have to understand. So start thinking, start understanding, and be rational. So there's all this infrastructure being built in this industry, but who are using it? Who are building it? Are there enough transactions? Are there enough volume coming through to justify the money being raised on these blockchains? And where are the most being built? We just went through them right now. If it's stable coins, predominantly on Ethereum, as we can see here. If it's tokenized assets, like we saw here as well, predominantly on Ethereum, right? These are tokenized treasuries. Tokenized treasuries predominantly on Ethereum, and same with commodities here as well. We also see is on Ethereum. So we don't have to be a genius to understand that, okay, the World Economic Forum has challenges. They discussed it at the beginning of this year. The challenges were to find a solution to the crisis that we just discussed at the beginning of this session. And now the solution to it is the blockchain technology. And now the question is, VCs don't just randomly jump on these new narrative-driven projects anymore, but now they ask themselves, where are the volumes coming? Where's the money going? Who is building? Who is using these blockchains? Who is building these infrastructures? And like we discussed at the end of this session, we saw Walmart, we saw Coinbase, we saw the Swiss Bankers Association, we saw BlackRock, JP Morgan, Visa, MasterCard. They're all building specifically on Ethereum. And that gives us an idea of where this technology, who is going to be the winner takes all in this new technology race that is driven by fundamentals, driven by addressing real challenges we faced within the industry. And what does this mean to us as an industry? It means that we are becoming more mature as an industry. We're becoming more regulated. Mainstream adoption is taking place, led by financial and non-financial institutions that are highly regulated and are bringing mainstream adoption. Mainstream adoption means retailers have more options, easy on and off ramping. We see centralized exchanges like Coinbase offering direct deposits, skipping banks altogether. We see Walmart getting involved, offering crypto purchases between Bitcoin and Ethereum. You can now custody your cryptocurrencies with Walmart and trade cryptocurrencies with Walmart all app. And then we see the Swiss Bankers Association actually allowing you, and tested already, tokenized deposits on the blockchain, Ethereum blockchain directly. We have the stamp of approval that it works, it's more efficient, and now employees can have their salaries deposited directly on Ethereum blockchain skipping centralized exchanges altogether, skipping Walmart altogether, skipping all these extra on and off ramping steps. And now employees in Switzerland can have their salaries paid directly on Ethereum blockchain, and having their funds already tokenized, ready to swap for whatever digital asset that they need. This is where we're headed towards. And the place where that is being built, whether it's by JP Morgan's tokenized deposit network, whether it's by BlackRock's digital, or rather, I should say, tokenized US treasuries, whether it's by Visa and MasterCard's infrastructure, whether it's by Coinbase's infrastructure that they're building, or the Swiss Bankers Association, it ends up, all roads end up leading to Ethereum. So Ethereum is being looked at this neutral ledger. Doesn't belong to any specific geographic region, but rather is looked at as a neutral technology that can be used by every parties, all parties. And because it's placed on a public blockchain, it's interoperable, meaning that everybody can use, and all these banks can use this one deposit token because it's in a public ledger. Community, this is the message for today. And what that means for us as a community, as an ecosystem, is simple. Because our ecosystem is focusing on exactly addressing these four challenges: lack of liquidity, inflation, unsustainable staking distributions, and inefficient use of trading volume. Because we are addressing these challenges, it puts us at a point where we make the most out of this cycle that is about to come. And this cycle that is about to come is going to hit us with a lot of liquidity, a lot of volume, because it will involve heavy printing that is about to come our way. So community, this is it for today. I hope the message came across. And I want to wish the Queens tomorrow on their Sunday session an amazing session tomorrow. If you're not part of it and you're a Queen, I highly encourage you to be part of it tomorrow on Zoom. And for the rest of the community, I want to wish you a wonderful rest of your weekend. You're all very much appreciated. I hope the message came across. Till we meet again.